give you an update on the markets now. The local exchange expected to move higher today after Russia gave diplomacy a fighting chance, saying it was partially withdrawing its troops massed on the Ukraine border. Asian markets were higher following the positive lead from Wall Street, with the local share market likely to follow suit. Let's speak now to Jimmy Moyaha, independent analyst, joining us to talk us through the latest on the business front. Jimmy, good morning to you. A sense from you on how the JSE has opened today with Russia, of course, in mind, and specifically saying that it's partially withdrawing its troops.
Morning, Toli. Morning to the viewers. The markets open firmer. We saw the JSE open stronger. We are trading in the green on the top 40. A lot of the top 40 stocks are in the green as well. I think the overall consensus around the escalating trade or the escalating tensions within the Ukraine and Russia is that managing those tensions and managing those relationships is more critical than ever now at this point. We've seen in the build-up to these tensions and in the height of the tensions, we've seen markets like the gold price react, with gold reaching highs of 1,870. We're seeing gold sitting at about $1,855 per ounce at the moment, which just represents the sort of easing of those tensions being filtered through to the market. We're still seeing oil prices high, still above $92 a barrel, approaching that $100 a barrel mark that we spoke about a couple of weeks ago. But overall, I think the de-escalation of the tensions is going to be very well received from a market's perspective, provided that continues.
Let's talk Stats SA, which is expected to release inflation data for the month of January, Jimmy. If it comes in higher, what will this mean? And if it comes in lower, what will that mean for consumers?
So we've got the CPI numbers coming out in about half an hour or so at about 10 o'clock. A higher than expected number. I mean, consensus at the moment is about 5.7%, and this is probably off the back of the interest rates having been hiked by the central bank previously. So we are expecting that to sort of start to bring inflation under control and keep it under that key 6% band. From the results perspective, if the results come in higher than expected, we could potentially see that the Reserve Bank would be forced to implement another rate hike. And depending how much lower they come in, you might even see that the Reserve Bank might hold rates steady in their next MPC review. Either way, for consumers, if we do get a higher print from an inflation perspective and it does go closer to that 6% or even above that 6%, it is going to be worrying for the central bank, and they're going to look to want to curb that. I mean, we've seen that South Africa is one of the few economies around the world that's actually started the rate hike cycle earlier than our developed partners such as Europe and America. Yeah. We know that Turkey was another example of interest rate hikes that happened too early and too soon, and we're just hoping that the decision at this point to manage the rates the way the central bank has been managing them is going to yield the desired results from an inflationary standpoint.
Let's talk company news. DRD Gold publishing its interim results and dividend declaration. Talk us through those numbers. What do they tell us, importantly, about the state of mining in the current trading environment?
So I think DRD Gold's numbers are not exactly a reflection of the entire mining space in South Africa. I mean, their reported revenues were down about some 16%. They reported that their operating profit and their earnings per share were also down. If they look at the comparative 6 months to December 2020. So from that perspective, I think they didn't present the best results, and we've seen that in the market. They're trading about 1% down. Their parent company, Sibanye, is trading about 2.6% up, though, and that's just, I think that's more evident of where the mining space is sitting at the moment. We've got a lot of, we've had a lot of good performance from our PGM miners as well as our gold miners. We know that earlier in the week, Anglo Gold as well as Gold Fields were both trading up ahead of some positive news on that front. And I think DRD's just had a bit of a tough time in the reporting periods that they mentioned. And it's for them, I think it's a good thing that their parent company like Sibanye has so much diversity in terms of what they're holding from a mining perspective.
Let's conclude the conversation, Jimmy, with the African alcohol powerhouse, which is now in the hands of regulators after Distel investors voted yes to the deal. Question is, what happens next? Is there a chance that regulators could potentially say no?
Well, that is a very real possibility. I mean, the deal still has to go through the tribunal, the competition tribunal, and they have to assess that. But it's unlikely that the regulator will stop the deal as it stands. I mean, we know Remgro has an effective stake of about 30% in Distel, with the PIC holding about another 29.9% there as well. And both parties are looking to, or the expectation there is that both parties have accepted that deal, and they're happy for that to go through. We know that there have been one or two asset managers like 91 that have expressed that this is an undervaluation of Distel. They're not very happy with the price valuation and the price being offered. And we also know that the plans for Distel after Heineken acquires it is to delist the stock. And that also, I mean, we spoke about this last year when we looked at the delisting trend that's been very prevalent on the JSE, and this could be another company that follows through from that perspective. I think we'll have to wait and see what the regulator says in terms of the Competition Commission and the takeover regulations around that. But I think from a shareholder perspective, we've got a lot of shareholders that have accepted the deal, and those that haven't accepted the deal will likely accept it by the time the paperwork is done.
Jimmy Moyaha, independent markets analyst, thank you very much for your insights there.